So welcome everyone. Thank you for joining Consensus webinar today. My name is Kathy and I'm the APAC Marketing Manager at Consensus. So today we have lined up an amazing speaker on the topic DeFi made easy for organizations. So this webinar is your one-stop shop solutions for the DeFi investment. You will be learning about the tools that can make the DeFi investment process safer, faster, and more efficient for your organizations to navigate in the DeFi and Web3 spaces. So before we dive in, let me introduce our speaker today. Here we have Johan Bornman, product lead of MetaMask Institutional, Alessio Colini, he's the CEO of Hex Trust, Ulisse Delot, he's the Managing Director APJ from Chainalysis. So last but not least, we have a moderator, Penit Wichesel today. He's the CTO of Tokenix. So today webinar is going to be 1 hour. We will leave around maybe 10 minutes before the closing. We will have a Q&A sessions at the end. So please send us the questions, type it in the Q&A box, and we will try to answer as much as we can. With that, let's kick started. Penit, the floor is yours.
Thank you, Kathy, and thank you everybody for having me. All right. First of all, before we jump to the topic, maybe I'll ask all the panelists to tell us about yourself, your company, your business, and area you're focusing on, please. Maybe let's start with Johan.
Thank you, Penit. Good morning, all. My name is Johan Bornman. I work for Consensus. Just a quick reminder, Consensus is a Web3 product company. We build products and businesses the likes of Infera as well as MetaMask. Within Consensus, I lead a product called MetaMask Institutional. We are an institutional wallet that provides the broadest and most in-depth access to Web3. We do so by using the most trusted wallet in the space, MetaMask, which has 30 million monthly active users. And on top of that, we've built a range of capabilities to cater to institutional needs. First and foremost, and perhaps most profoundly, we connect into custodians to work with licensed custodians, qualified custodians, as well as custody tech providers all over the world. And then we've also built additional capabilities to provide risk assessment on DeFi pools, a portfolio dashboard that solves for portfolio monitoring, reporting, and portfolio management, and essentially thinking very deeply about the transaction flow process for organizations and solving needs in all those categories.
That's a lot of features. How about you, Alessio?
Hi, thanks for having me here. My name is Alessio Colini. I'm the CEO and co-founder of Hex Trust. Hex Trust is a leading custodian based originally in Asia, and we have recently expanded outside of Asia. We currently have offices in Hong Kong, Singapore, Vietnam, Dubai, and we're looking at the Americas as the next step of expansion. As of the end of 2021, we held more than $5 billion in assets under custody, and our clients are the main institutions in the digital asset space, as well as traditional institutions that are entering the digital asset space to provide digital asset services to their clients, or to directly invest into digital asset businesses.
All right. Thank you, Alessio. And Ulisse, please.
Hi, everyone. Thanks for having me. I'm Ulisse Delot. I'm the Managing Director for Asia Pacific and Japan at Chainalysis. Chainalysis is the blockchain data company. So historically, we provided compliance and investigational solutions to financial institutions, government, and cryptocurrency businesses to prevent money laundering. But we've also expanded in the last few years to provide market intel solutions to help companies make better investments on chain as well. I'm normally based in Singapore, and I'm very excited for this DeFi panel.
Cool. Yeah. Thank you very much. Yeah. All right. Yeah. Thank you everyone again for the great introductions. And now let's just go around our topic. Yeah. All right. According to the recent report, like the TVL of DeFi has been increased from like 600 millions, like at the start of 2020, yeah, up to like almost 240 billion so far in 2022, like nearly 40,000% rise. Like DeFi is taking the world like by storm. So could you all share with us like why and where DeFi is heading? Maybe start at Johan.
Yeah, so I generally think there's sort of three mental models to hold. And the mental model that resonates with you will be dependent on how crypto native you are really. The typical mental model for institutions is that it's the birth of a new asset class. It's potentially a good inflation hedge, and therefore we need to asset allocate towards crypto and DeFi generally. And so we're starting to see more traditional organizations, build portfolios, build crypto teams to, again, asset allocate as part of a wider portfolio. The second mental model is probably a bit more profound. It sort of takes DeFi and takes the view that what it offers is a rethinking of the financial system from first principles. Building every single financial primitive, whether it's lending, borrowing, saving, hedging, insuring, rebuilding that from first principles and making it interoperable, making it more secure, making it transparent. And then obviously that is deeply profound. It creates a tremendous opportunity. It means that the way that risk is created, the way the risk is transformed, the way the risk is transferred, especially the long tail of individuals as well as institutions, is fundamentally better. And then the third mental model is that we essentially have the birth of a new internet. And with that, we have network effects, Metcalfe's law. We have a Web3 economy that forms around that through attention, through the allocating of time and resources. And that Web3 economy is very important and needs a financial system. And that is essentially what DeFi is. It's the financial system for the Web3 economy. And just like the birth of the internet, there's sort of a world that existed before the internet, and now we spend most of our time on it. I think this panel is a great example of it. The same will happen with Web3. And I think regardless of which mental model you hold, you think you come to the same conclusion, that this is deeply profound, it's important, institutions want and need access to it. And it's not a question of will it happen, just a question of time really. And so, that's sort of the why and where are we going? I think all three of these mental models are mutually exclusive. I think all three can be true and will happen. And I think you're seeing all three sort of play out in very fundamental ways. You are starting to see more institutions allocating as part of their portfolios into crypto generally. You are seeing the likes of SocGen, launching covered bonds on MakerDAO. You are seeing kind of the birth of decentralized autonomous organizations and the birth of Web3 economy, the birth of the Web3 economy. And I think, we are very much of the infancy of where this is going. And I think from consensus point of view and MMI's point of view or MetaMask Institutional, we definitely fall in sort of the latter two camps. We definitely view that, this is the birth of the new internet. And this thing that people think that futurists and technologists do on weekends and this weird little ecosystem will be the ecosystem that we all live in and transact in.
Right. A lot has been going on really, yeah. How about your view, like Alessio?
Well, first of all, I cannot agree more. I think it's we share exactly the same view. Maybe to add a little bit on what was just said. So I think the role of DeFi in the blockchain is really the role of a banking infrastructure, right? But so for everything that you want to build in the world in terms of applications and everything, usually you need all the support from banking environment, right? To provide the basic services that banks provide to normal corporates and businesses in the world. Now, usually in a normal world, you would first build the applications, the use cases, the assets, and then the banking environment will be built around that. In the blockchain, we're very lucky, right? So we started with a very nice infrastructure. Then somebody built the DeFi applications, which is basically the banking services. And now we're building the first use cases, right? Things that really people use on a daily basis, right? So we're very lucky because we already can rely on all the DeFi infrastructure and services that have been built. So people, when they use their applications, their use cases, they can already use FX services to exchange one currency into another. They can already lend, they can obtain a yield, they can borrow, they can leverage, right? So I think this is very important. And I think people tend to separate the different parts of the ecosystem, kind of cryptocurrencies from DeFi, from Web3, from the metaverse, from NFTs, and say, okay, well, I really believe in the metaverse, but I don't believe in blockchain, or I believe in blockchain, but I don't believe in DeFi. It's all intertwined, and it all works together very well. So the role of DeFi will really be critical for the development of the whole blockchain ecosystem.
All right. Thank you, Alessio. Yeah. Further questions to Chainalysis. I know Chainalysis have done many analysis. Yeah. But what countries are responsible for this like tremendous growth in DeFi and why? Can you help to share with us?
Of course. So first of all, I'm completely aligned with everyone here on the panel. We're still at an infancy stage when it comes to DeFi. We're looking at 250 billion locked in smart contracts connected to DeFi. There is no reason why this industry wouldn't pass the trillion within the next 12 to 18 months, and then over 2 trillion within the next 24 months. If we compare DeFi with, the real estate market or derivatives, even, we're looking at a very, very small amount today. So this can only get bigger. When it comes to the DeFi adoption, actually Chainalysis came up with a DeFi adoption index and a global cryptocurrency index. So what we're trying to do is look at where countries are pushing the adoption of crypto, and why we're seeing that. So what we're seeing primarily is that the majority of this adoption came from experienced cryptocurrency traders and investors, so the institutional piece. When it comes to the geographic level, generally the countries that had the biggest exposure to DeFi were middle to high income countries, or countries which already had a developed cryptocurrency markets. The number one in our ranking is actually the United States, which maybe isn't a surprise to most people here listening in, but also number 2 and number 3 are Vietnam and Thailand. I was in Vietnam actually just a week ago, and the ecosystem there is just amazing. I think that in these countries we're not used to read a lot about the expansion of the DeFi industry there, but like there's a lot of underground adoption that is happening, and we're tracking this in our reports. Another thing that we're seeing is that the data show that the largest transactions make up a bigger share of the DeFi activity. This basically suggests that DeFi is disproportionately popular for bigger investors. So we're seeing a lot of these very, very interesting trends and movements in the industry, but we're still at the very, very beginning. We still have to see more retail adoption, for example. We still have to see more initiatives coming from financial institutions. We're seeing that a lot in the US. We're seeing some of that in APAC. So it's very interesting trends that are happening at the moment, with not simply the bigger countries such as the US leading the way, but also smaller countries in ASEAN, such as Vietnam and Thailand.
That's interesting to hear Thailand is also in the list. All right. Thank you very much for it's a great insight from the expert. So yeah, as I totally agree with all of you, DeFi is really, really growing rapidly. So we could see adoption from individuals managing their own funds, but how's the DeFi adoptions across traditional financial institutions? Johan, what's the trend here for the institutional investors?
Yeah, so definitely expanding, definitely growing, I'd say quite rapidly. Like any technology, it has an adoption cycle, DeFi. So you obviously you have your pioneers, your early adopters, your early majority, late majority, and then your laggards. And that is normally driven by the sophistication of the individual or the organization, what capabilities they have to implement new technology, and very important, what regulatory oversight they might face. That is often very correlated and causal in terms of adoption of new technology. And so what you found, and I think some of the other panelists have already touched on this brilliantly, is that you have seen sort of adoption cycle around very certain types of institutional investors. And we've started with our crypto native DAOs and our crypto native hedge funds or crypto funds. that can ape very easily into the latest DeFi protocols and earn APYs. And then what you've seen over the last sort of 9 months or so is more regulated capital step into the space. So these are your family offices, your hedge funds, even your traditional asset managers. We work with a lot of IRAs in America, for example. Traditional organizations and traditional financial organizations, I think, are still a little bit far off. I think regulatory headwinds are still quite an important facet for them to consider. But we are starting to kind of see many organizations dip their toe into the space. I referenced earlier a covered bond that StockChain launched on MakerDAO. We within MetaMask Institutional are in conversation with several different large traditional financial organizations, all the way from POC and kind of experimenting with DeFi for certain parts of their clients to actual integration. But I do think, as referenced earlier, we're very much the beginning of this ecosystem, and therefore I think it will take quite a while for the most traditional of traditional organizations to step into the space. I think it's far easier for the British Museum to issue an NFT than a regulated consumer bank offering DeFi yields for their clients. And so I think we're a little bit off away from that. But I think for us in the industry, and I think again it points to all three panelists here, all of us are thinking very deeply about how do we build the infrastructure, how do we build the products, the services that can bridge every single institution, every single individual into Web3. So I think the summary of that is it's increasing. It'll happen slowly and then suddenly, but the trend is our friend.
Maybe if I can interject here. So obviously the trend is quite slow, what we've seen in the last few years, but I wouldn't discount a kind of exponential acceleration coming in the next few months. Actually, I'm also the co-founder of another company, which is a DeFi protocol called Clearpool, where we do decentralized lending and borrowing. And yesterday we just announced one of the first Wall Street players, Chain Street, entering the protocol and lending 25 to 35 million in the protocol. So I think this was probably one of the first examples of kind of a Wall Street giant entering the DeFi world. And I mean, once the first player does it, then I think it is already attracting the attention of all the other ones. And I think we'll experience some kind of herd mentality, and we will see very quickly an exponential pace of Wall Street players really looking at the space and starting to experiment how to be there. Obviously, certain things have to happen, and we'll talk about that in order to make it happen in a proper way. But I'm quite optimistic.
Right. Yeah. Thank you, Johan. With the Chainalysis, the blockchain data platform, do you see the similar trends, Lisa?
Yeah, I think that we touched on a couple of important topics. Regulation is definitely extremely important. We have to have an ecosystem that is well regulated, and I think that regulation. We went through a lot of countries banning cryptocurrency to now regulating cryptocurrency. I think that regulators this year will focus a lot on DeFi. Obviously, DeFi is going through tremendous growth, so there needs to be clear regulation across the board, not simply in certain developed countries, and this will actually accelerate this growth. So I think that's extremely important. But I see a lot of having conversations 2 weeks ago with banks in Australia. There's a lot of interest in DeFi. There are a lot of activities. We talked about POCs going on. So I definitely see us moving from the 250 billion to the trillion within the next 12 months. That's my personal view. It could take a bit longer, but we've just seen tremendous growth, 40,000% you mentioned, and we're just at the beginning. And from speaking with banks in Vietnam, in Australia, in Indonesia this week, next week, Malaysia, it's just amazing to see the interest and the activities that are happening. So I'm very confident about the trillion in the next 12 months. personal opinion.
But totally agree for me. Yeah, it could go faster than that. So yeah, thank you, Lisa. Yeah, so with so much popularity, right? Yeah, DeFi was very, very famous for laundering stolen funds and mainly through like hacking. Yeah, according to the report from the industry broker marketplace, like crypto crime has like risen a lot in like 12 months. Yeah. Has DeFi become an easy target for hackers? And how can we prevent the DeFi product from being abused by the cyber criminals? Maybe start by Chainalysis.
Yeah, so one thing that I'd like to mention is that, when we look at illicit activities connected to cryptocurrencies, we're only looking at 0.15% of the overall transactions happening on chain. So it's a very, very small percentage, much smaller than probably what you would have in the traditional fiat finance world. What we've seen in our reports is that from 2020 to Q1 2022, 35% of all cryptocurrency value was stolen thanks to a security breach. So the most important dangers that we've identified were inaccurate price oracles and exploitable code. The good news is that there are solutions available to tackle these two dangers. To ensure price accuracy, we look at decentralized price oracles such as Chainlink, for example, which basically protect platforms against price manipulations attacks. When it comes to smart contract security, it's code audits, and this would basically prevent basic common acts, let's say. The third piece is transaction monitoring, and this is where Chainalysis comes into play. Law enforcement must become more proficient when it comes to analyzing DeFi transactions, but also teams behind the protocols must understand what tools are available in the space to prevent some of these attacks and activities. We have a solution, for example, that does pre-screening of wallets connected to smart contracts to determine whether these wallets are indirectly or directly connected to illicit activities. So there are different things that need to be kept in mind by both law enforcement and protocols. We talked a bit about the hacks and the breaches, but also the transaction monitoring piece. I think these are the three important things that we need to keep in mind. We'll see more hacks in the coming months and years. This does not mean that we're going backwards. It's actually very normal. We're talking about new technology. We're talking about companies going from 0 to 1 billion, 2 billion very, very rapidly. And so hackers, in certain cases, nation states are really exploiting these breaches or breaching into these companies' security systems, and that's normal. We've seen that at the beginning of 2017 with some of the ICO craze. We'll continue to see that now, but we have solutions to prevent this from happening and to lower the portion of illicit activities connected to DeFi and cryptocurrency overall.
Yeah, that sounds great. Yeah. From the MetaMask Institutional products, is there anything to add on this, Johan?
I know we're supposed to argue on these panels, but I think we're in full agreement. I think Lisa summarized it perfectly. I think there's often a misnomer that crypto or DeFi is filled with nefarious counterparties, money laundering, and layering transactions. And I think if you compare, and you see quoted some of the statistics there, if you can compare the actual statistics, it's far lower that you find in traditional markets, or as Joe Luber calls it, legacy tokens. And so legacy tokens, there's far more money laundering that you find in DeFi on average. I think also it's important to note that there are a range of products that exist today that provide risk management from a KYT perspective. And Chainalysis obviously has built a fantastic product in the space. And there are a range of providers in the market that do similar things. And so every single transaction is labeled, categorized, quantified, tracked. It is a terrible tool for money laundering. And yes, it doesn't mean that there's zero money laundering, but on average, there are a lot of products to help risk assessment and making sure that if you're an institution and you have to comply to the 5th AML directive, that pass the responsibility onto you to make sure you're not transacting with nefarious counterparties. There are a range of tools that can help and support you in doing so. So I think that's incredibly important to sort of make that statement. Again, there's a lot of innovation in the space to cater to institutional needs around KYC. And there's also a lot of innovation happening on KYC as well. Decentralized identity is a good example of this. And I think when we marry these two things together, I do think we can get to a world that actually respects privacy, adheres to the values of permissionless innovation, but then also solves for KYC and KYT in very innovative ways. And I think that's really, really important. And I think Ulysses also touched on a very, very important point, which is that I think regulation is going to have to change. Historically, here in the UK and in London, lawyers become regulators. And I think in the future, we're going to need people that can run SQL queries and understand the nuances of programmable blockchains and what risk they pose and what risk they do not pose. Again, maybe to summarize, I'm very sanguine with the fact that this ecosystem will build the tools that will solve these problems.
Yeah, I'm pretty sure that regulators in each country are now trying to see what they can do to make certain things are not going out of the control, right? In your view, how should DeFi be regulated, Alessio?
Very, very interesting question. Well, there's a number of angles, right, that you can look at that. So, and trade-offs more than anything. Obviously, you're not going to be able to regulate everything from day one. Regulators are still, I would say, sometimes struggling with Bitcoin, Ethereum, or some of the stable coins. So asking regulators to really start understanding smart contracts and the nuances and the risks that are embedded in the smart contracts. This is not a criticism to the regulators. It's just very complex also for industry practitioners, right? So it's a trade-off between kind of regulation, being able to really control what's going on, and on the other hand, really allow innovation to build this kind of Lego finance that practitioners in the industry are building. On the regulation side, if we really want to simplify the issue, right? So regulators are mainly looking at two things. I used to work for the regulator, right? So if I was sitting on that chair today, I would look at the two main aspects that they're looking at, so which is AML, right, or CTF, and on the other side, the investor protection from at least smart contracts integrity and security perspective, right? And the smart regulators are the ones that understand that these are very complex issues to solve, and they collaborate with companies that are looking to solve these issues, right? So on the AML, many regulators, they work with Chainalysis. Why? Because they're, I don't want to say the best, but I mean, one of the leading companies in the space, and they know how to evaluate the risks that are embedded in doing transactions on the blockchain. And on the other side, also on the smart contracts, integrity, security, etc., there are companies that are doing very well and are emerging as leaders in the market. If you look, I mean, it's not a chance that Goldman Sachs recently invested in Certic, right, an audit company for smart contracts. So it's already happening. I think I would more or less collaborate, not try to stop innovation, but collaborate with the good companies that are creating the controls in the industry. On the other side, you have, if you want to look at it from a different perspective, you have the retail versus institutions, right? So I would say stopping the retail from accessing DeFi protocols is actually going to be very hard, especially with the kind of self-custody and all the solutions that are available in the market. However, you could create some protection on the institutional side, right, especially on the KYC, etc., and collaborate with the main players in the industry to actually create some kind of walled garden approaches for the main institutions to enter the space. Examples are what Compound Treasury is doing, right? To offer yield, but at the same time, controlling who is in and who's out of the smart contracts, or ARC, Aave Arc or Pro, right? Or even other platforms that are, for example, I mean, even Clearpool, for permission blockchains, permission pools, where you have to allow and profile the people that are lending and borrowing in a certain pool. So I think it's possible. It's there are different perspectives to look at it, but I would really like to see regulators working with companies in the space that are trying to solve the same problems that they're looking at.
All right, thank you. Do you have the same view, Johan?
Yeah, so maybe it's important to highlight that Consensus is a software business, and therefore we have the benefits of potentially not having to have such strong interactions with the regulators, because we're not a fiduciary or carry a regulatory license. I think generally speaking, though, we think it's very important that regulators understand the nuance of programmable blockchains. As I referenced before, what risks they pose and what risks they absolutely do not pose, and also understand what is being built to manage those risks, to stop those risks from happening. And also understanding that the industry is doing quite a lot. We obviously have Chainalysis on the panel today. Alessio mentioned some of the innovations happening in the ecosystem already around Aave Arc, as well as Clearpool being a KYC DeFi protocol. And then on top of that, I think the idea of regulating software, whether it's the development software or the usage of software, is quite a draconian stance on things. And so I think generally speaking, I don't think there's any crypto company that does not welcome discussions with the regulator. I've not been on any single panel where everyone's ever said, well, we don't encourage more discussion with the regulators. So I do think it's very positive that there's dialogue between the industry and regulators. And then again, as I mentioned before, that there's an understanding of this ecosystem. And to Alessio's point earlier, it's complex. It will take time. This is a very fast-moving ecosystem. The innovation cycle is second to none. And so it's completely understandable that regulators are still sort of wrapping their heads around, how does DeFi work? What is smart contract risk? Where is the actual risk from a consumer or systemic risk perspective? It's very much understandable. These things are still being figured out. But generally speaking, like I say, the dialogue is absolutely welcomed. And the final thing I'll say is, I think it's very hard to regulate some DeFi. How are you going to regulate a teenager in their basement tokenizing their assets on the metaverse that then they go and swap and lend and borrow against? And I struggle to think how that will happen. And so I do think innovation needs to be fostered, needs to be encouraged, because as I pointed out earlier, there's something deeply profound happening in this ecosystem.
All right, thank you. Is there anything to add, Ulisse, about how DeFi should be regulated?
I think that we covered probably the majority of the points. Probably the important thing is also making sure that the regulation happens at a global level. So some of the things that we've seen in the past, we've seen countries regulating locally. We've seen the Financial Action Task Force setting recommendations for regulation, but it's been quite difficult for some of these countries to actually enforce these regulations. And as long as we only have a handful of countries regulating DeFi, then it becomes difficult to see developments across the board. So I think it will be very helpful to see clear guidance and guidelines from FATF, and then having the countries that are following these guidelines enforce them rapidly, and see global regulation being enforced. Probably that's also one of the points that we've seen missing in the past few years. There's been regulation in some parts of the world, but not in other parts of the world. And we've seen arbitrage from that perspective from different players. And that's obviously part of the innovation and the fact that we're at an infancy stage and so on. But we need to see better global regulation. I think that would be my only addition to what was said so far.
All right, thank you. All right, now we are focusing on institutional investors, right? How to maximize returns through like strategies like borrowing, lending, staking, yield farming, trading, and more with a highly secure, scalable, and compliant custody framework. Question for you, Alessio.
All right. I'm not sure I'm the best to answer this question. What I can say is that from a custodian perspective, right, we don't provide trading strategies or how to maximize yield, etc. But I think what is really important from our perspective for investors is, first of all, to give them access, right? So most investors in the traditional world today, they don't have access to it. And some of the investors in the cryptocurrency space, they don't know how to access it. Secondly, is when you access it, how can you avoid losing money, right? So how can we provide you with the security and the level of kind of enterprise grade access to these platforms that allow you to minimize the risk of losing money? We're seeing, well, we mentioned already all the risks that are embedded in the in accessing smart contracts. And thirdly, how to do it in a compliant way, right? So how not to get in trouble and with regulators, etc., because you're accessing platforms that are actually related to some kind of financial crimes, etc., that you don't want to have exposure to, right? So for us, it's really about providing these tools to investors to make sure that they can do all of the above in a secure way and in a compliant way. Then there are some, I would say, ancillary services, right? So once you access those platforms or those services in a secure and compliant way, so how can you do it in a way that complies with institutional requirements? So how can you get statements? How can you reconcile transactions? How can you get the right pricing for the assets that you're holding at the right time? How can you have at hand all that information that your auditors will need, right, to audit your accounts? Those are more secondary aspects. I think the security, compliance, and tools aspect that obviously together with Chainalysis or MetaMask Institutional, these companies can provide, I think are going to be critical for the investment strategies of institutional investors.
Yeah, sounds like a good tools is really important, right? So yeah, let's continue about tooling to support like DeFi portfolio management, like upon like custodian rollout of EVM's chain support, fund managers working with MetaMask Institutionals can now execute trades across Ethereum-based sidechain and layer 2. Why having this feature is so important as the product lead of MetaMask Institutional? Johan, what do you think?
Yeah, so I think over the last sort of 12 to 18 months, you've seen an explosion of other additional layer 1s. Maybe the simplest mental model around this, and it's quite effective, is a gentleman called Asif Kareshmi, who's a VC for Dragonfly, talks about blockchains being cities. And so different blockchains, like cities, offer different things to institutions as well as individuals. One might be financial center, another one might be entertainment center. And so what you've had develop over the last, again, 12 to 18 months is a series of layer 1s, layer 2 scanning solutions, essentially building solutions for institutions and incentivizing protocols to build on their layer 1 networks. And then what you have off the back of those protocols building on those layer 1s is those protocols incentivizing users to use the protocols. And that then drives tremendous interest from institutions because it allows for high APYs, it allows for high risk-adjusted trading opportunities. And this is why there's been sort of a cycling of institutional capital across different layer 1s over the last 2 years. It went from BSC of Q1 of 2021, then Solana was really popular, Avalanche in Q3, and you tend to see institutional capital cycle between these different EVMs and non-EVM chains to chase the highest APYs possible. I think long term, it's important that there's an aspect of scaling, and that we referenced earlier that we're all working on kind of building the infrastructure that can bridge all institutions, all individuals into Web3. And I think a lot of these networks, these side chains, these layer 2s, are being built specifically for those reasons. what you tend to find in most technology that you have sort of a Pareto distribution. So you have, there's one search engine today, one social media, social network, one professional network. And I suspect with blockchains, probably we'll see the same thing. We will have one or two or three dominant blockchains and then kind of a long tail catering to very specific needs. But regardless of the future, I think, different blockchains solve different needs for individuals, for institutions, and that's why they are profoundly important.
All right, thank you, Johan. So in the same area, Hex Trust is also providing a platform to support institutional investors. In your view, how will cross-chain capabilities impact an organization's DeFi trading strategies? Alessio?
Yeah, I mean, as of today, there's still quite a bit of friction to move from one blockchain to another, and cross-chain capabilities are still being developed at the moment. Obviously, I mean, if you're talking about EVM chains, it could be a little bit easier, but we have an ecosystem where there's a new blockchain based on a different framework more or less every month. And it's very hard to understand which ones will be successful and which ones will be adopted by investors. For us, again, it's about tools. At the end of the day, the way I see the market is that at a certain point in time, don't know when, institutional investors or even retail users, they wouldn't even know which blockchain they are transacting on, right? They will just transact an asset, and that asset will be, or maybe originally issued on one blockchain, but then will be represented in different shapes and forms on other blockchains, and the whole thing will be completely transparent, but will not require any effort from the end user. So for us, on the Hex Trust side, it's the same thing. It's about providing the tools to make sure that investors can do these things on different blockchains without having to do anything special or having to understand the differences between the blockchain protocols that they're using. One example, for example, we are, as a custodian, we're a council member on one of the blockchain bridges, which is called Hashport, that allows you to basically move tokens and assets between different blockchains, for example, from Polygon to Hedera, in a transparent way, using a decentralized governance mechanism. And I think those are really the important things that we have to look at. So how the infrastructure players that the end user might not even know who they are, right, are looking to build this infrastructure to make it completely automated and transparent for them.
Yeah, thank you. That's interesting to see, like when blockchain layer is really becoming transparent for the investors. Yeah. So yeah, to facilitate broader investors' engagement across ecosystems, what tools are you building to provide the best user experience for institutions? What is on the roadmap for each of you? Maybe start with Ulisse, please. Sorry.
Yes, so we, as I mentioned probably at the beginning, historically, Chainalysis focus on transaction monitoring solutions and compliance. So we do have a solution named Chainalysis Know Your Transactions, which basically allows compliance officers to automate their compliance work, make sure they understand what users are connected, if any, to illicit activities, really understanding if you have a 2 million user base, understanding what percentage of that base is potentially connected directly to illicit activities. We have a solution called Reactor, which basically is used mostly by law enforcement, but also by banking compliance officials to run investigations on chain. So certain banks do have those capabilities. They have teams that are running investigations on chain. And this is basically the solution that's been used by law enforcement agencies to, for example, take down the largest child pornography ring in the world in 2017 to recover some of the largest hacks in the world. So those are the two compliance investigation solutions. We also have solutions that allow banks, but also cryptocurrency businesses to have a better understanding of, let's say that I'm a bank and I want to bank a cryptocurrency exchange. We have a solution that allows banks to basically understand how does this cryptocurrency exchange or cryptocurrency business do when it comes to AML compared to other businesses? So we really have that overview of what's going on chain and how these businesses are looking at AML. But lastly, like what we're focusing on is market intel. So market intel is basically a way for us to provide information to financial institutions, but also to cryptocurrency businesses about mainly two things. One is what are the movements that we're seeing on chain, why we're seeing volatility in certain periods of times, why this volatility primarily comes from these two cryptocurrencies, what do we expect in the market? So this could target, for example, financial institutions, but also hedge funds. And then another piece is a solution that is basically tailored to help cryptocurrency businesses better understand their users. So what is my user doing on chain when they're not using my platform? Are they investing more in this specific cryptocurrency? Should I then allocate more marketing budget to that specific cryptocurrency? So these are some of the things that we are focusing on, and we actually have a very big announcement coming up on this very soon. There's also something else that we're looking at when it comes to DeFi and NFTs. But that's going to happen a bit later on this year, and I unfortunately cannot talk about it. I can only mention this, but hopefully this gives a good summary.
Cool. Yeah, thank you. How about Johan on the MetaMask Institutional?
Yeah, so as referenced earlier, we tend to think very deeply about the transaction flow process of an organization. So, how do organizations do research analysis? We have a cryptoeconomic team that provides a range of detailed analysis around, DeFi protocol research, DAO research, governance, tokenomics, etc. Then next, after research, you tend to have compliance. Here, we provide risk assessment on DeFi pools, both pre and post-share compliance. We have a swaps product that aggregates the market. So we focus on giving you the best quote at all times. And a lot of things we're working on now and sort of expanding our capabilities on is that we've launched a portfolio dashboard that provides a rich interface from which institutions can manage their portfolios, track their portfolios, and get detailed transaction reporting. And a lot of the work we're doing there is kind of thinking very deeply about sort of the next phase of that, which is sort of execution. What does institutional execution look like? And how can we offer kind of advanced execution for institutions?
That sounds good. Yeah.
And before I forget, also because I have to give a plug to Alessio, we also work with world-class custodians, and one of our fantastic partnerships we have announced recently was with Hex Trust, and so it's another way we think very deeply about how can we solve for institutions across that entire transaction flow process, and obviously custody is a very important piece of that.
Okay, thank you. So yeah, side Hex Trust side, please, Alessio.
I mean, nothing else. For us, it's about integration, right? So obviously, we're very proud to have integrated MetaMask Institutional and to be able to provide this kind of service and tools to our investors and clients. And at the same time, on the other side, Chainalysis to make sure that they are protected. So for us, it's really about the integration of the right tools. Combined with the security, licensing, and scalability environment that we can provide.
All right. There are also some questions coming from the listener as well. Right, let's go through it. The first one from Kai-chan. This one, I guess, it's touched around the DeFi's regulations. I guess we have already answered a few topics around the regulation. So, Kai-chan, if you have anything more specific, please add more to the list. Maybe I'll jump to the next one. The next question to all the panelists: what are the top 3 barriers to retail adoptions that you are seeing? Maybe start with Johan.
Yeah, I think don't have any more profound thoughts on this topic. Generally, I would say that retail adoption is quite significant. I can't remember the exact number of crypto ownership in the US, but it's above 50% in most demographics. And so I think that, within retail, we have fantastic products being built in fiat on-ramps that make the acquisition of crypto really seamless. Those fiat on-ramps are integrating seamlessly into wallets now to, again, make adoption very simple. And a lot of the, protocols also are directly integrating these on-ramps. So I think user experience is getting a lot better. I think NFTs has been something that is important because I think it's far easier to cross the chasm for consumers than potentially DeFi, which can be quite complex. And so, I do think a retail crypto adoption is absolutely accelerating in most regions from the data that I look at.
All right, Alessio?
Yeah, I mean, I agree. There's no much barrier of entry for retail. I mean, there's probably a little bit of regulatory constraints in some countries, but not really blocking the retail market just as yet. Just a few markets completely banning the use of the broader use of cryptocurrencies, but apart from that, I would say most of the market is still quite open. And that there is still this problem of fiat on ramp and off ramp, which could be, I would say, if not smoother, because it is already quite smooth, it could be cheaper, more efficient. But I think it's still due to regulation not really allowing the traditional financial system and banks in particular to support the main platforms, that we still have to pay that kind of 100 to 300 basis points to access the crypto world. For the rest, I think we have a very very high adoption and actually very quickly growing. Right.
Anything to add, Ulysses, on the barrier?
Yeah, I think that we talking maybe about NFTs from a Chainalysis perspective, looking a bit of the numbers. We're looking at a $44 billion industry that will continue to grow tremendously. We're seeing a lot of new use cases using NFTs. I think that's a very interesting one, actually, where we'll see a lot of growth. I've actually spoke with a lot of NFT companies and gaming companies in Vietnam, which was very unique to see the development they're seeing, the development that we're not hearing, like when we talk about NFTs right now, but like I expect a lot of the trend focusing on NFTs. I think that the industry will more than double within the next 12 months again. And most companies will, commercial companies, we're already starting to see that now, but we'll need to have a strategy around that to be able to be competitive in the market. And so we're just starting to see that globally. So I think that that's the main one that I would bet on if I could.
All right. Okay, there's a lot of questions coming, but I think we are running out of time, so I'll just pick up one last question from the attendees. So the next one is, long term, do you foresee DeFi replacing some or all of the traditional financial systems functions, or just like complement it? Yeah. Anyone would like to answer this one? Johan?
Also, yes. Yeah.
Thank you.
Yeah.
Well, you answer yes.
Yeah, I think there's an argument of saying like, okay, what was going to be the distribution platform? Is it going to be DeFi's infrastructure and then potentially Web2, BTC fintechs owning kind of the user experience and UIs? I think there's maybe some nuance and debate to be had there. But I think all three of us are, deeply crypto native, and we believe in the future of this industry. And so I'll say heck yes.
All right, thank you. And so one last question for everybody. Like, in 3 years out, what percentage of the financial landscape do you think will be running through DeFi systems? Questions for everyone. Maybe start with Lise.
What percentage of the financial
Of the financial, yeah, all financial landscape do you think will be running through DeFi? Like,
I think that 3 years from now, so we talked about this at the beginning of the call, this industry moves, exponentially. I've never seen anything like that. It goes extremely fast. 6 months, we're looking at dog years or cat's lives, if you like. So 3 years from now is probably 10 years from now for any other industry, or even longer than that. So to me, it's more like if I'm a financial institution and I do not have any strategy that is connected to DeFi, or I do not adapt my strategy to some of these new trends, then I'm going to struggle. I'm definitely going to struggle. So I think that most banks right now are trying to understand DeFi. And this is also something that we do at Chainalysis. We do a lot of educational work to educate banks, but also governments to understand what is DeFi, and then build strategies to really capture that part of the market. So I wouldn't be able to give you a percentage. My answer to you would be, if in 3 years from now, you are a bank and you do not have any exposure or strategy around DeFi, then I think that you're going to struggle very, very quickly.
all right. How about
maybe
you?
maybe last one for me, really. I think it's, I mean, I cannot predict on the institutional side, central bank, etc. But look at the young population, the gamers online, right? 10 years old, 8 years old, 12 years old. Their first experience of finance is now with the blockchain, right? With wallets, buying, selling cryptocurrencies, buying shields on the game. So the adoption there is more or less 100%. Yeah, and that's, I'm not sure about the older generation, how it's going to evolve, but this new generation, the adoption is going to be extremely, extremely high, right? And it will drag the whole kind of the rest of the market as it kind of evolves into a broader number of people.
All right, cool. Last one for you, Johan. Do you see the same trend, like that in 3 years, things are all going to be like running by DeFi?
Yeah, it's. I think technology is completely overestimated in the short term, but completely underestimated in the long term. And I think that in 3 years we might be further away than we think, but I think over a longer time horizon, again, it's inevitable. So it was almost pointless to debate whether it's going to be 40% or 50% in 3 years, because the long term is going to be 100. So.
All right, cool. Thank you very much. And we are running out of time. So yeah, I'd like to thank you all the panelists for joining us and sharing some great insight about DeFi trends for institutional players, and also sharing the roadmap on the products. Really interesting and exciting to see DeFi market in the coming years. So yeah, thank you everyone. Thank you all so much.
Thanks for having us. Thanks.
Thank you all.
Bye everybody. Bye.